Good morning, traders. This is Michael coming to you from Gamma Edge on Monday, September 22nd, with our pre-market prep session. As always, here at Gamma Edge, we'll start with our three pillars: sentiment, structure, and trend. If you haven't liked and subscribed, go ahead and do that on X as well as YouTube. You'll be notified when we go live with any additional content throughout the day, including our midday live updates, as well as our post-market recap of how we use our tools to navigate the SPX option structure for the day. Let's go ahead and dive right into it. We'll dive right into our market trend model. This is based on the tick index to get everyone orientated if you've never joined us before. The bolded white CT is our intraday or instantaneous cumulative tick. That's basically just indicating buying versus selling between market participants of the overall market. The bolded white CT, if it is trending down and under our shorter term moving average, is what we refer to as the railroad tracks, just to give us a momentum indication that indicates obviously more selling. Towards the end of the day on Friday, intraday, we did see some selling. And then we saw a slight uptick back to the upside, indicating some buying into the close. Breadth indicator up here, the green line is new highs, the red line is new lows. Obviously, you want to see new highs outpacing new lows. That's more stocks being bought than sold. And then our filtered cumulative tick area here, this is plus 1,000, minus 1,000 larger block orders by institutions or obviously larger market participants. You want to see that above zero and trending up, indicating that institutions are involved in accumulating stocks in the overall market. As of Friday, we were down under the zero line, so obviously that indicates more stocks are being sold. And then our cumulative tick indicator here. And then our colored ribbon, this is a longer look back period of how we position for an overall uptrend. As long as the red is above cyan and we're trending to the upside, then we stay long the overall market in our longer term accounts. Moving on to what we call our quality tick. This is our tick RC. This is what we base our mechanical portfolio on. If you've seen any of that education, make sure you check out our blog on gameedge.us. We have a extensive post about how we use our mechanical portfolio. But basically, if we're continuing to trend up and above the colored ribbon, and these are in positive slopes, and we're still entering positions in our mechanical portfolio. So as of Friday, we did see a slight drop, obviously, in the tick RC and cumulative tick to the downside, and then we slightly recovered to these moving averages. So basically, we're at an inflection point on the tick index. We're at the top of the colored ribbon and below the shorter term moving averages. So this could continue to the downside, obviously more selling in the overall market and slice into this colored ribbon, or we could recover these shorter term moving averages and move back to the upside. So we'll be patient and cautionary as we head into the open today, obviously post OPEX, and see how market participants are looking to position. All right, let's go ahead and dive into the SPX options market. We look at the SPX options market for positioning via the options, as it's the largest, most notional value, has the largest value in the market participants, institutions, as well as shorter duration participants speculate within the SPX options market. This is the SPXA. This is what we call our cruise ships. You can look over here in our web app. This tells us which expiries are turned on. Obviously, all expiries are turned on. Our next expiry, obviously, is the October expiry, monthly expiry on the 17th. So we're call dominated above and below spot price. That just says that this net delta column is green, indicating that we have out of the money call speculation as well as in the money calls below us. How does that relate? That just would let us know that any pullback should be supportive, as these in the money calls positive delta should continue to support as long as we stay above the 6,600 level. That's the transition level down here. You see the GEX transition 6720, you see the DEX transition 6600. Obviously, we'd like to be above both of those for speculation to the upside. You do see speculation here at 6,700, 6,750, and all the way up to 6,700. So really a bullish overall look. Any pullback should be supportive unless we see some overall erosion of this structure, which we're not seeing at the moment. So that's the takeaway for that SPXA. All right, let's move on to the SPXP. These are speedboats, basically, that steer the tankers or the cruise ships. These expiries obviously are 0 DTE, as well as you can do weeklies on the web app if you turn specific tiles on or off. So the takeaway here is we're call dominated above and below spot price, just like the SPXA. Net delta column green, up and down, indicating in the right hand plane, which is above spot price, that out of the money call speculation is alive and well. We see 6,700 is our PGEX via the green dot, as well as our COI. That's the highest call open interest up there. And then we see our transition levels. Obviously on the full expiries, these are slightly wider than what you'll view on the 0DTE. And we want to stay above those transition levels, or at the very least within those overall transition levels, to stay in a bullish overall state that we want to see appreciation to the upside. So again, 66.50 will be important there. Then we see 66.20. So this all expiries will match the bottom of our DS here for 0DTE. So when we see confluence, that again becomes an important area for the downside. And then we see all the way down to 65.50, which is GEX transition. So within this overall range, that's still bullish and supportive on any pullback. Obviously, we see 6,600. That's a round level, Livermore level, large net delta OI there that we navigated in the past few weeks to move to the upside. So call dominated above and below spot prices. The takeaway should be supportive on any pullback as long as we stay above or within the overall transitions. All right, let's move on to the SPX P-GEX ratio, or what we call the gamma edge ratio. This is basically a put call ratio, but we add a gamma component, so it's our short dated call gamma versus our put gamma. Obviously, you want to have more short dated call gamma, indicating out of the money call speculation to the upside would lead to price appreciation. So quick takeaway is, as long as we're above 1, call speculation is maintaining overall control. So your short dated call gamma is in control of the overall structure. And then as long as we're trending up or have a positive slope to the upside as SPXP continues to price appreciate, obviously that would be an overall positive divergence. And then if SPXP is moving to the upside in spot price, but our GEX ratio is dropping, that would indicate a short dated call gamma is leaving the overall complex. It would be difficult for spot price to continue to maintain that move to the upside. So again, takeaway, we're above 1, call dominated, slight positive slope here, 1.48, call speculation still maintaining overall control as SPX moves to the upside. So really nothing to see here, no takeaway. We'll just continue to watch this day over day and look for negative divergences or positive divergences, just indicating that SPXP or SPX spot price can continue to the upside. All right, let's look at the delta balance. So again, here we separate the right-hand plane, which is above spot price, left-hand plane below spot price. So again, just indicating how the speculators are positioning. The green is the right-hand plane, so you want to see this above 0, positive slope to the upside, indicating how the money call speculation still being maintained or coming into the overall complex. So that would be short-dated call gamma as well as delta. And then the left-hand plane is your red dotted line. That's below spot price. So again, you want to see that above 0 and maintaining at least a positive slope or a flat slope, indicating that call speculators are holding on to their positions and not closing or monetizing. And then the delta balance is the aggregate of both of those. So obviously, as long as that is at 1, that's indicating call speculation still in control. So steady as she goes here. Quick takeaway is call speculation still maintaining all overall control with this expiry, the 22nd, and then on out expiries into the end of the week. Again, we're above 0, delta balance at 1, and really it's just back and forth action with the overall speculator. So really nothing to see and nothing to change here. All right, let's move on to the SPXP net stack command, highest sensitivity areas for today. Quick takeaway is call dominated above and below spot price. So that's what you want to look at with the net delta. In the money calls below us, large left-hand plane integral. So any pullback should be supportive. You'll notice that that is 66.25. 66.20 was the bottom of the transition area on all expiries, as well as it would be the bottom of the drunken sailor range today. So we anticipate this to be supportive on any pullback. And then obviously you see 6600 in left-hand plane, Charm, Gamma, and Vanna. Right-hand plane strike, 66.75. So again, above the overall drunken sailor range and above transition, those out of the money calls would be the area we'd look for to the upside. 6,700 on the charm level, that's going to continue to be an overhead weight as we go through the day as time ticks by. The money calls here will continue to grow and be a headwind. And then you see the gamma levels heading into today. If we do traverse any of these levels, high sensitivity levels, that could cause some fuel to the fire for the upside. And then we see Vanna. If we see volatility drop, obviously 6,600, 6,700 continuous trapped in those areas. All right, sorry about that. Moving on to your DTE, call dominated above and below spot price. You can see via the web app, we have this tile turned on. Drunken sailor range outlined very well, 66.75 down towards 66.20. You see PGEX at 66.75. COI is off the chart at up towards 6,800, I believe. So again, that probably is non-existent today. So above drunken sailor range, we'd attempt to be long for a move up towards 6,700. Within the overall drunken sailor range, it's going to be extremely choppy, driven by intraday volumetrics as well as market participants opening and closing contracts. So any rejection at the transition area, it looks like we may open below transition. We'd anticipate a little bit more weakness or slight weakness down towards the bottom of that confluence of that drunken sailor range, which we've talked about at 6620. We'd anticipate that most likely to be supportive, so we'd be long that versus transition for a move back up towards transition. If we lose 6620, would be a slightly more cautionary for a move down towards 6600. If we lose 6600, obviously we'd be looking at 6580. And these all these levels most likely would be supportive as we pull back into an in-the-money call state, unless this overall structure continues to erode and we see out-of-the-money put speculation come in via our intraday vol M command. Again, that would be the call and put centroid slopes to the negative, to the downside, indicating that in-the-money calls were being transacted lower, out-of-the-money calls, in-the-money calls would be degrading, exposing those in-the-money puts above us, and then out-of-the-money call out-of-the-money put speculation would be increasing, and the in-the-money calls would be degrading also. But we're really not anticipating to lose the bottom of drunken sailor range. I'd anticipate us to be below the transition, chop around, and then the possibility if we move back above transition, head toward the top of drunken sailor range at 6675. All right, let's go ahead and look at our web, gameedge.us. Make sure you like and subscribe and join us there. Newsletter you can sign up for here, as well as our free courses, and then our pricing tab. Come join us in the Discord. All the tools turned on, 14-day free trial. We'd be happy to have you. All right, let's move on to our trading view where we have our levels overlaid. I've overlaid the 0DT transition level as well as our drunken sailor range, and then our full expiry trading view scripts. We also have 0DT trading view scripts as well as Thinkorswim, so you can overlay those in your favorite broker. So we continue to see this morning pre-market price. We're holding that the full expiry transition 6640 as well as COTMP. You see 0DT transition above. So the quick takeaway would be most likely testing the underside of the 0DT transition, which ultimately is 6650, which we oscillated around last week multiple times. So again, going to be a key level. If we fail there, we'd most likely be short for a move back down towards the all expiries transition. If we lose that, we'd look for the bottom of DS, which is a confluence of 0gex on all expiries as well as drunken sailor. So I think you can kind of get the idea that when we see a confluence of these levels as well as the expiries, those become important. So again, above 0DT transition, we'd look for a move up towards the top of drunken sailor range, and we'd be long that area. And then again, if we fail at the top of drunken sailor range, that may be an opportunity to short or do some sort of spread above there to sell if we do not look like intraday volumetrics are transitioning to the upside via out of the money call speculation. So hopefully that helps for the trading plan today. Unambiguous transition levels. If we're above bullish, we'd look for a move up towards drunken sailor range. Below, we'd be cautionary and slightly bearish. And then we'll be looking at the market trend model to see if the overall market participants are selling versus buying, as well as our intraday vol M command to see if we'll head down towards the bottom of DS and test the 6620 level for today. And then obviously SPY, we're below the 0gex and Intrans right now and below P-Trans. So we'd have to get above those levels for a move up towards the transition level. We see Qs chopping around the 0gex level for a possible move up towards P-Trans. IWM below 0gex, so I think you see the theme across the board here. A slight weakness pre-market heading into the open. We need to recover those levels pretty quickly to move back to the upside. Same thing with the stocks. The Mag 7 stocks are holding up very well compared to the SPX, so we'll continue to watch those. Obviously Tesla above P-Trans there, possible move up towards 500. NVIDIA was a little bit stronger this morning, as well as Google and AMD moving off the transition levels there. And then Amazon above P-Trans, Microsoft above P-Trans. So you see, obviously, most of the Mag 7 stocks, heavily weighted stocks, are above transition levels and possible move up towards plus gex. So as long as we're holding transition, we should be in for a little bit more supportive type action and bullish moves to the upside. So that's the takeaway for today. Transitions unambiguous and well-defined, could be extremely choppy within the overall drunken sailor range and if we're below transition. So let me know if anybody has any questions. I'd be happy to go over any single stocks in our web app really quickly. Have a few minutes here before we have to head over to the Discord and get ready for the open for our members. So anyway, thanks for joining us, everybody. Like and subscribe. OKLO, yep. Like and subscribe on X as well as YouTube. You'll be notified when we go live for any of our content. OKLO, let's see, this week's expiry. Call dominated bumble spot price within the overall transition area. So 135, we need to get above that for a move to the upside. 150, but we see PGX COI at 135. And then that drops very low. Oh, okay. So we have a flip here between our PGX and our INGX level. So call dominated, still supportive, but looking at this expiry, 135 is going to be that area to get over, and we're within overall transition. So not really seeing much speculation to the upside. So you'd like to see this PGX COI move up towards that 150 level if we're going to have any opportunity for price appreciation. So RKT, let's look at that one. So transition level is we transition from a positive gamma call dominated state into negative a negative put dominated negative gamma state. Sorry, that's where our transition levels are at. Nicola, RKT. So let's look at this expiry. 2150 the upside, PGX COI. You're within overall transition. So that could be a choppy area. COTMP should be supportive on any pullback. Actually, we're put dominated. Sorry about that. So most likely a little bit more weakness within the overall complex. 1950 is extremely important level there, as you see PGX and POI there. So if we get below that level, I'd anticipate possibly some more weakness. But 2150 really is the move to the upside that you should be looking at. But put dominated is negative gamma put dominated state, so it's going to be hard for price appreciation on RKT. Core weave. Look at this expiry. PGX at 130, COI at 125. We're within transition, so you kind of see a theme here for a lot of these stocks that are dropping into transition area. Extremely choppy. Call dominated though, so pullback should be supportive. But speculation to the upside looks alive and well. You'd like to see COI move up towards 130. That would then possibly give the ability for price appreciation up towards 130. But if you're above transition, 130 looks like a good target. 125 is a huge level though that you need to get over. GDX, let's look at that. Call dominated. This expiry 74. We're right at it. So that's PGX COI at 72. All expiries call dominated above transition. You're right at PGX, and then COI is at 70. So we might be, and then you see COTMC at 75. So out of the money calls go in the money. So most likely monetization in there. So speculation may be dropping a little bit in GDX, looks like overall. So maybe getting a little bit long in the tooth with that as it's had a massive run to the upside. So you'd like to see PGX and COI advancing to the upside. And you see it's actually dropping there for the next expiries, right? So speculation's probably waning a little bit on GDX. GDXJ, that's the gold. Is that the miners, I think? So call dominated bumble spot price, PGX 100. Yeah, you see these zeros. Obviously the options within this overall is yeah, it's only 9,000 on the options, so not a significant amount of options here to look at the overall speculation. So that's why I'd look at GDX instead of GDXG. PanW, let's check that one out. $215 PGX COI. You're within transition, so if you're above transition, I'd ensue the upside up towards 215. That would be a speculative area, and then most likely some monetization up there. So a little bit of upside left on that one. But you see all expiries, PGX actually drops and COI in all expiries. So the next expiry would be the best opportunity to move up towards 215. And then after that, you see PGX COI actually drop. So speculation after the next expiry drops also. So again, not a lot of upside speculation on PanW. And that's what we look for, right? We see the overall structure advance or decrease with each expiry, and that's why our web app is really an invaluable tool that you can click through the expiries and see if the structure continues to advance. Like if you're long the stock obviously you want to continue to see the structure advance to the upside. So honestly, I haven't looked at ARK in, gosh, years. Put dominated, PGEX 86. Actually, you see COI and POI down at 75. So if we get below transition, could see some weakness. Call dominated into this transition though, so that's supportive. And then after this transition, it goes to put dominated. So for heading into this expiry, I would say no. After this expiry, heading into next week, if the structure doesn't change, possibly. Key takeaway here is, yeah, 95,000. So yeah, if you get below transition and it heads to put dominated, stays put dominated, could be a downside play there. Yep. Not necessarily into this expiry though. You're still call dominated unless that changes through the week there. CGNX, it does not have enough OI to be in our database. Morali, yeah, needs to have at least 100,000 OI filter for it to be in our database. If it's less than 100,000 OI, we don't have it in our database. But we do reevaluate our database from our members. They submit tickers. And the reason is because of dealer control and speculation, right? We want to be able to look at the option structure and have a good idea of where speculation is, which would include PGEX, COI, NGEX, and POI. And if it doesn't have enough options for our algo to be able to set up the structure, then it most likely is not under that much dealer control. So then the hedging metrics, hedging doesn't play out as well. So hopefully that helps on that. So. All right, thanks everybody for joining us. We appreciate it. Again, like and subscribe, share our content. We're just barely below transition. SanDisk, yeah, I can look at that. Barely below transition heading into the open. We'll check this last one for Sherman. I'm gonna start charging you by the ticker. Just kidding, Sherman. Yeah, not enough OI for our options complex. So yeah, no problem. Just joking about charging you. All right, so transition, we'll watch for a rejection at the open, 66.50, and then if we get above transition, obviously we'd be looking for nice, great. We'd love to have you, man. Love to have you. And again, above transition, we'd be looking for the top of drunken sailor range. Within drunken sailor range can be extremely choppy today, so everybody be cautious. Post OPEX, we'll look where the positioning goes heading into this week's. Thanks everybody for joining us. We appreciate the interactions as well as the responses on YouTube and X as we continue to grow, and our community just continues to grow. And we are a member-driven community. We do have a GE team. We do have obviously developers, but we listen to our members, and if they want feature enhancements, that's the direction we go. And members drive our community, so we appreciate it. All right, everybody, make it a great day. We'll see you later.